Hello everyone and welcome to Insider Financial Talk Stocks. My name is Alex Carlson. I will be your host today, the editor-in-chief of InsiderFinancial.com, and in this video we will recap today's market action and discuss our game plan for tomorrow. But first up, to get our market moving reports on top small caps, click that link in the description or go to signup.insiderfinancial.com or sign up with your email and any of the pop-ups on InsiderFinancial.com. You can also sign up with your mobile number. It works for all numbers worldwide. Simply enter your country code first, followed by your number. For US and Canada, be 1 plus area coded number. Never begin the format with 0. It will not work. And after you sign up, you will get a welcome email, which includes a free copy of the Insider Financial Guide to Penny Stocks ebook. Our ebook, our email service, and our text messaging service are all free services from InsiderFinancial.com. We do not run any paid subscription service whatsoever. No Discord rooms or Telegram chat groups. With that out of the way, let's dive in here, folks. Well, overall, it was a choppy day on Wall Street. We had inflation data came in cooler than expected. Equity futures popped on the data, but markets just could not hold their gains. Inflation moderated somewhat last month. The Labor Department said this morning the CPI index rose 0.1% in March and by 5% over the previous 12 months. This is the smallest annual increase in nearly 2 years. But core prices, which exclude volatile food and energy items and in which central bankers see as a better gauge of underlying inflation, rose 0.4% in March and by 5.6% over the previous year, up from 5.5% in February. We had Fed minutes today also showing that stubbornly high inflation and tight labor markets led Fed officials to signal that they could raise interest rates at their next meeting despite a greater likelihood of a recession later this year. The fallout from the failures of two mid-sized banks led Fed officials to consider skipping a rate increase at their meeting last month, but they concluded regulators had calmed stresses enough to justify a quarter-point rate rise, according to the minutes. For the first time since officials began lifting rates a year ago, the Fed staff forecast presented at the meeting anticipated a recession would start later this year due to banking sector turmoil, the minutes said. Previously, the staff had judged a recession was roughly as likely to occur as not this year. Looking ahead, the minutes hinted at potential policy divisions, with some officials pointing to greater risks of a sharper than anticipated slowdown, and others highlighting the prospect of firmer inflation later this year. Philly Fed President Patrick Harker said yesterday he has long anticipated the central bank would need to raise the Fed funds rate above 5% and then sit there for a while. The inflation problem doesn't get solved by itself. It needs higher unemployment to go there. This is according to Chief U.S. Economist Stephen Blitz at TS Lombard. As I keep saying on this channel, guys, this is a trader's market and not an investor's. What I try to do here at InsiderFinancial.com is to put stocks on your radar. I'm not a financial advisor. All of this is educational purposes only. Put stocks on your radar, help you create a watch list, and then, as I always say, play green and not red. You're looking for that momentum. You want to get on that wave, ride it, and get off. Forget this diamond hands, paper hands, BS, and completely forget, dip buying penny stocks. That is the fastest way to the poorhouse. You're going to end up becoming a bag holder. These are not blue chip stocks. You want to dip buy, go buy blue chips, go buy an ETF. Do not do it with penny stocks. And I know, let's use today as an example. NCMI. I talked about this one yesterday for you guys. Actually, 2 days ago. Put this on your radar, what was going to happen. AMC came in, bought a 9.1% passive stake, and I said it was enough to get the market excited. There was momentum, happening. And look at this opening range today. It opened at 30 cents. Dipped to just under 29 cents, ran to 36 cents. That established the opening range, and then at 10 o'clock it blasted through there. So again, I know people say, "Oh, Alex, why would I be buying it at above 36 cents if I could have bought it at 20 cents?" you know, 20 cents, these stocks can go to zero. You know, ask anybody trading OTC stocks. You know, a lot of bag holders, you know, are stuck in stocks that went to zero. And you know, you just don't want to take that risk. You want to play the momentum. So you know, you bought it at 36 cents. It ran all the way to 65 cents today. So this was almost, you know, 100% potential gains. The momentum was there. This was a great trader today. You know, you got this run, and then you got the, you know, the sell-off at the end of the day. Gave you plenty of opportunities to make money following this strategy. And look at the others. You know, GFAI, I've been talking about this one over and over on the channel. I mean, this is the opening range here. 930, open at 17, ran to just under 22. And then once it broke through that, it ran all the way to 34. If you can't make money doing this, I can't help you anymore. I mean, I'm not a financial advisor. That, you know, this is just educational purposes only, but just trying to give you, you know, strategies, put stocks on your radar that provide an opportunity to make money. And, you know, another one was GCTK today, delivered that, BFRG. But here, look at this strategy, you know, in terms of other names. CELZ, you know, it was up 80 cents today because you had this big gap. But if you waited to the open, you would have, first of all, never traded it, because it never broke through that opening range, and it sold off throughout the day. So from $1.30, you know, down to 86 cents. So if you're not trading the strategy, you bought it at $1.20, $1.25, you're sitting here with a loss. So you got bag hold today. You know, I don't know where CELZ goes today. What I'm trying to do, you know, in my own trading, I don't want to be in every trade. I don't want to be in every stock. I want to look for those high probability setups. And most importantly, I want to stay out of losers. You know, learning to, you know, avoid a loser, that is probably the biggest skill, or the best trading advice. You know, again, none of this is financial advice, but trading plan, trading strategies I can give you is to avoid, you know, what stocks to stay out of. And CELZ was a classic example of staying out. Another one was HTCR. I know a lot of people are looking at this one saying, it was up 59% today, but it gave you no opportunity to make money. You know, it opened at $1.80, which was the high of the day, and then it dropped all the way to $1.20. So if you got in at the open, I know a lot of people are, you know, they're, you know, they want to pull that trigger. They want to buy. And, you know, that's really going to put you in the poorhouse. So again, guys, learn to, you know, let the market open. I know a lot of people want to trade pre-market, you know, after hours. Let me tell you what's going on there. A lot of people that are trading pre-market, they're buying and then they're the ones selling at the open. So that is a very common strategy. So you can load up in the pre-market, you know, create all, you know, there's a lot of pumpers, a lot of people on FinTwit, you know, they're trying to pump a stock. You go to StockTwit's boot, you know, you see all the emojis, rockets and everything. Well, they're trying to get people excited to get the, you know, the bag holders to come in, the lemmings. So you come in and they're the ones, you know, you're buying it from them at the open. So again, you know, please, you know, just don't become a bag holder. Just trying to help you guys, you know, as much as possible. And tomorrow we're getting a lot of people talking about PEAR, closed at 11, you know, just 11 cents, trading at 13 cents after hours. I'm neither bullish nor bearish. It's a bankruptcy play. The company announced, you know, they're filing for bankruptcy. They're going to be selling assets. You know, bulls will, you know, there's a lot of insider selling been happening on PEAR. I don't know how it's going to play out. You know, if you look over here, looking at PEAR, you go over here and you see you got all this insider selling down here. SAM Partners 4 LLC, 10%. They sold, it looks like their entire stake here at 12 cents. I know the bulls are going to spin it. This is an overhang. You know, the seller is gone. Now we can pump it. I don't know. You know, if you follow this opening range, you know, if they break it, if in the first 15 minutes, this thing's green and breaks out of that opening range, they could easily take this to 20, 25 cents. But let's see. I don't know. I have no opinion whatsoever on a lot of these, because when I say opinion, it's all about playing the pump. Play the pump. Don't stay in for the dump. So again, it's like you don't want to be the sucker. You want to learn how to trade these plays. And when you do that, you will become a very successful trader. And that is key. So take the blinders off, wake up, see what's going on, and, play the pump and get out before the dump. Let's see what else is going on here. FRGT regained compliance. Nice day today. Just a $9.7 million market cap. So watching this one tomorrow. So PEAR, FRGT adding to watch list. DBGI. This is one we've had on our radar screen. CEO put out this tweet today. DBGI earnings call Monday after the close. Details coming tomorrow. And I think this tweet says it best by Muso Uso. I took a loss and got out. All the hype when you publicly said your company was $70 plus per share value, but have never seen anything to keep the momentum to the upside. Instead, all retail got burnt. I know some things are out of your hand, but positive PR could keep company in a good position. And yeah, a lot of people got burned in this one. DBGI. You come over here and you look at the daily chart. I mean, you could see it's just absolutely gotten killed. He says there's private equity looking at the company. We shall see. I hope for a lot of shareholders that are still in the company that he can deliver and create value for his shareholders. So let's see how it all plays out. Next up are two Phil Frost plays. He's came out. We got news here. He bought. Let's see here. $2 million worth. He bought 1 million shares at $1.97. We're trading at $2.52. Dr. Phil Frost. I mean, he's almost 90 years old. Loves penny stocks. He owns the most impressive house on Star Island in Miami, probably worth 200. The house alone is probably worth $200 million. Some billionaires go to the casino, they play blackjack. He plays penny stocks. COCP, OPK. I don't know if he makes money or not. I've not seen any real big winners that he's been involved in. Again, I think this is his hobby. This is his passion. OPK has just been people have been buying, he's been buying this one nonstop, and everyone's, following his lead. I mean, he's bought, $3, just under $4, all the way down to, $1 and change. The stock's at $1.47. So again, if you're following him, it hasn't worked out that well. COCP been a nice trade though. He bought at $1.97. We're at $2.52. Let's see if this momentum can keep going. Watch again these biotechs for PR drops, and keep it on your watch list. Play green. Don't be buying these red dip days. It's just gonna not end up well. Again, I can give you a billion examples of a 20-cent stock. Mullen. Case in point, a lot of people thought that was the bottom, and we're at 10 cents now. So again, things can go lower. So just keep that in mind. Nothing is ever too cheap. It's all about especially for a lot of these dilution pigs, and they're just turning on the shareholder printing press and just diluting their shareholders. So again, be very, very careful out there. For subscribers, I am not seeing anything new right now. We'll be watching pre-market, and if I see anything, I will send out an email and a text message. That's why it's so important, to sign up. If you want our updates, the only way to get them is to sign up with your email and your mobile number. Again, mobile is the fastest way, to update you guys. There's just no time to do a pre-market video and for you guys to listen to it. A lot of times the move has already happened. Finally, guys, Insider Financial and myself are not investment advisors. This video does not provide investment advice. Always do your own research, make your own investment decisions, or consult with your nearest financial advisor. This video is not a solicitation or recommendation to buy, sell, or hold securities. This video is our opinions meant for informational and education purposes only and does not provide investment advice. Past performance is not indicative of future performance. Thanks for watching, guys. Good luck. Bye-bye.